to today's presentation. Today we're doing a market recap with Vince Vora will be our presenter and Jeff Gibby will be our host. We are excited to have Vince in. It's been a bit since we've had him in. His presentations are always great. He knows the market really well. So be prepared with some symbols to talk about, and we'll be getting there in about 8 minutes or so. I'll check back with you in just a few minutes with some other notes and items of business. But as you're coming in, feel free to go ahead and give us where you are, where you're tuning in from today. We'd love to hear from you, and be prepared to enjoy the presentation. All right, we'll check in a few minutes. Thanks. Hello again, everybody. We're going to be getting started in about 5 minutes here. I just wanted to take a quick moment and just let you know about some events that we have coming up in the next few weeks. Let me just pull up a website here for you. So this is our website. If you go up to metastock.com/events, we actually have 2 different events coming up over the next few weeks. First of all, tomorrow we have what's called our Online Trader Summit, where we'll be having 3 different presenters talk. We'll be having Rahul Mohindar speak about the RMO ATM3 and identifying trade and trend identification. We'll have Price Headley in talking about how to target big trends with $1 options, and also Jeff Gibby talking about hidden gems in Metastock. So that's going to be a great event. That's tomorrow starting at 10 a.m. Eastern. If you just go to that metastock.com/events and click on register now for free, you'll be able to register for that event. And then in 2 weeks, get my mouse over here, there we go. And then in 2 weeks we have what's called our Traders Conference coming up. If if you click on this link, this is actually a 3-day event we have coming up. We'll have 3 different full days of different professionals speaking for about an hour each. You can see John Bollinger, Chuck Hughes, Stephen Place, Ryan Jones, Barry Burns, Jeff Gibby. We'll also have Jeff Tompkins. You can see there's a number of different speakers here. This is going to go on for 3 days. So it's an all-free event, just like the Trader Summit tomorrow. Just need to go up and register for it, and you'll be able to participate in that. So that is some of the items that we have coming up here. Again, as you come into the room, feel free to let us know where you're tuning in from. Again, this is Market Recap with Vince Vora and Jeff Gibby. I'm your host, Kelly Clement. We'll be getting started in about 2.5 minutes. So I'm going to go check in with our presenters, make sure everything's ready to go over there, and we'll be getting started soon. Thanks.
It's good to have you here. What an interesting week. We're kind of coming up on an election. It's going to be a good time to talk about the market. But first, let's read a legal disclaimer. Hold on just a sec. Let's get it over here. Okay. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. Today we have a special guest. It's Market Recap. Basically, we sit down, we talk about a couple of stocks, we say what we think the market's doing, we talk about what's going on. It's a pretty fun little event. My guest today is going to be Vince Vora. He's the head trader at tradingwins.com, and he does a really good job. I've worked with him on a number of projects over the years. We've developed some pretty cool algorithms with his ideas and my coding skills. We've been able to put together some really, really cool things that have been really well liked. So with that being said, let's just bring him on. How you doing today, Vince?
I'm doing well, Jeff. I'm just trying to get my camera set up. There we are. How are you?
I'm good. How are you doing?
Good. Thanks for having me on.
Good. Yeah, of course. I love having you here. I'm just going to basically we're going to look at your charts today. So
sure.
I'm going to change the presenter over to you. In general, it's been kind of, I'd say, a little bit of a flatter week if you're just looking at the Dow. Do you expect any surprises between like now and the election?
You know what? It's going to be an interesting week. Things have seemed to be getting a little quieter, although I was expecting a lot more volatility as we move into the election. But I think that volatility is more likely to hit after the election.
Okay.
So I think it's going to be a kind of a slow grind into it. I think we'll probably see some people take some positions off ahead of that day. So as we get closer to the end of next week, we'll probably see some light down days as people lighten up, maybe see more hedges getting put on. It's surprising. I have a chart to share with you a little later, but it's surprising that there are still very few hedges in place by the looks of it for this election. So that's interesting, but I do expect volatility to hit the market afterward.
I gotcha. Okay. Well, we're looking at the S&P 500. So what are you seeing?
We are. And, to me, it's more of really a channel starting to build. I mean, we had this lower high here, and it's just slightly lower. I would be more comfortable calling this the start of a channel. And whenever I look at a channel, even though it's not perfect, because you can see we didn't quite get back to those highs. We actually put in a lower high there. Well, so far we're holding that 20-period moving average. That's what I have here on the chart, the 20-period moving average. And to me, we may stay in this range for a little while. But breaking above that high or that low is what will really kick off that next move. And that's what I'm looking for. I'm looking for either a break of the recent high or a break of this recent low for something a little more dramatic in this market. And the other markets are fairly similar. If we look at the Dow Jones Industrial Average, very similar look, a little tighter here. The Nasdaq 100. Again, very similar look. So I think a break of the recent high or break of the recent low is what's going to kick off the next move. And that may very well be, the day after election night, but which is what, a week and a half away?
Yeah. Yeah. It only feels like we've been in election season for 4 years. So
I know. Exactly.
Do you think, do you have any kind of like thoughts in terms of like, without going into kind of like a lot of details about who you think should win, do you have a feeling which would be better for the market in general, whether it be like Biden or Trump?
You know what? We had a bit of this discussion in our session earlier today with our members. So we meet 3 times a week, and today was one of them. We discussed this a little. I think the markets would be better served with Biden, and I'll tell you why. And I'm not by any way trying to get political or trying to influence anyone's vote in any way. I strictly look at the economy and the markets. And right now, I think they've really gone in a separate direction. I don't think the market is tied to the economy at all right now, but it's only a matter of time before it comes back in line. And when it comes back in line, I just don't think that the Trump administration has been very good for the economy at all. I'll go back several years now to when they first took over. And I remember mentioning to my members that the tax cuts he proposed, I thought were going to pose a problem, and as well as the tariffs. I was really worried that he was going to implement the tariffs. And when he did, not only did he do it, he did it on a bit of a wider scale than I first thought. And they've been in for quite some time now. So if you really look at the numbers and you really look at the economy, it was trending lower well before COVID ever happened. COVID really sped up the timeline. COVID really had a much greater impact and has made the economy way worse than it would have been at this point. But it's here and it's a reality and we have to deal with it. And things aren't getting better, they're getting worse with COVID. I can share a few charts there with you as well. And so I think that we need to end those tariffs. Number one, I think they've been horrible for the economy. And I think those tax cuts have really widened the wage gap, which I think is something that isn't talked about enough in this country. It's talked a lot about in third world countries, but not here. But that wage gap is a real problem. What I mean by that is the tax cuts were mainly for the higher income earners and the businesses. And unfortunately, they didn't reinvest those profits to create jobs. They bought back stock and several other things. But the problem is that when you put more money into the hands of the higher income earners, they're so few as a population that no matter how much more they go out to spend, it can't spur the economy. But the lower income earners, they're the masses. And even giving them just a little more than what they have, and they go out and spend a little more than what they're used to, that's where you get the tick up in the economy. And so I think the policies have widened that gap. And so my opinion would be that Biden would eventually be better for the economy. And,
are there particular sectors that you see kind of that you'd be looking at? Do you look at it that way? Okay, like for example, obviously, if you're looking at Biden, and if you watched the debate last night, he's talking a lot about solar and solar.
Right.
Apparently, some solar stocks are up today. I didn't look at them, but apparently, there's quite a few solars. Do you think certain sectors will perform better under a Biden presidency? Is that something that you'd be looking at versus a Trump presidency? Is it going to affect what your day-to-day investments? I'm very curious about this.
I think anything in the clean energy space would obviously get a boost under Biden. I think under him, he would implement a lot of that, and so those clean energy companies would let me see, which I think it's no. Oh boy, I'm trying to remember the symbol. I try to find it for you here on another one of my monitors. Give me one quick second.
Yeah, you're fine.
There's one that I had in mind here that I was looking at. Where is it? Here it is.
I was looking at something. Apparently, there's a solar ETF called TAN. TAN.
Sorry, CAN? CAN? Oh, TAN. Yes.
TAN, like I'm all tanned right now. I thought that was...
Absolutely. And TAN has been doing very well. And so here we go. We're getting an exit here right now, but TAN would absolutely get a boost if Biden came in, I believe. The opposite would happen if Trump won. I think this would come back at least down to below 60 if Trump ended up winning. Another one is CLNE, clean,
okay.
Clean energy fuels, that I think would get a boost under Biden. And there's a few others in that space as well. So yeah, and there's also going forward, what I think traders should keep in mind is on the COVID front, the whole vaccine play or plays around a potential vaccine coming. So, and I think if we do get a vaccine, regardless of when it is, as long as it has what's the word for it, the efficacy, generally the FDA requires at least a 50% efficacy rate to approve it. If it's 60 or 70 or a little higher, the higher it is, the bigger the impact it'll have. But I think at that point, whatever you saw take a dramatic hit when we first went into a lockdown, and I'm talking about the airlines, cruise ship stocks, certain restaurant chains, that sort of thing. I think those will all get a big boost once that happens. So you just reverse it. Energy sector as well, which has been really beaten up.
I was going to ask you to look at XLE today.
Yeah, XLE. And, I was looking for it to come back here and potentially put in a double bottom near 22. It's not there yet. It may still come back to that point. But if we take out a high here, then we could start the march higher. But, I mean, this has really been beaten up. And, I thought retesting it, that same level would be a great turnaround point. But, again, I think with a vaccine, energy should get a boost. And then, of course, you have the companies that really took off because of that lockdown, the Zooms of the world, right? DocuSign, Peloton, all of those with a vaccine will probably take a hit. Now, the scary thing there is the lack of support behind. This is something that I've talked about with my members as well, is the stocks that led us higher did so in a fairly dramatic fashion, not leaving much support behind. So any turnaround could be just as dramatic and come right back to areas of support. So I think for Zoom, we're probably looking at coming back somewhere in here, somewhere in the 280 range, 275, 280 range, potentially. For Peloton, and I mean, this thing just keeps going. It's been incredible, right? It's sitting on support right now. But again, I think, you're looking at potentially coming all the way back to mid 70s here from where it is now, 122, or the highs being 140, right? Some of these, I do think, the trend has shifted. There are people that will continue to work out at home and never go back to the gym, that sort of thing. But, these have been, trending for so long and so quickly that vaccine news, I think, would knock it right back down.
All right, cool. Very interesting. What is your gut in terms of how long do you think we're going to be dealing with when does life get back to normal, in your opinion, Vince? I'm curious.
Well, that's the scary part, because if we look at the COVID cases, we're right back to the highs. So it looks like we're at the worst spot right now. So we're definitely going in the wrong direction, right? Today, what did we have? Another 71,000 cases, I believe it was today. So, if we were improving, we could see some light at the end of the tunnel. Right here, we don't. We even see the death rate ticking up as well. So, unless we get this, and by the way, these charts, I should say, I've pulled them off themarketear.com. So, unless we get that under control, it's going to be difficult for life to go back to normal, right?
Definitely.
I mean, a lot of businesses will remain partially closed, if not fully closed, and people will be afraid to hop on flights or take cruises, that sort of thing. And I think the biggest worry is we go back to that. Think of a cruise liner taking off, and then we hear that there's cases aboard that cruise. Everything would automatically shut down again. But the worst part of this is that we haven't felt the real impact yet, meaning there is a bigger impact to this, but there's a lag. And so we haven't really experienced it yet. For example, I'm sure you saw the article. Let me find it here for you if I can. Here, let me bring it in view here. There it is. So Yelp, I know this is only referring to Yelp, but it's a good indication. Yelp data showed, now this is from September 16th, so it's even worse now, but they say that 60% of the business closures from the lockdown there are now permanent. I've actually heard that about 25% of small businesses globally have shut down permanently. I mean, just think of the impact of that, right?
Yeah, that's Main Street, basically.
Exactly, which will eventually have an impact on consumer spending and so on. So there is a lag, but I do think we haven't seen the worst yet. And the scary part to me is with cases still ramping up, deaths still ramping up, how much worse is this going to get? And are we going to be forced to go into some sort of a lockdown again, which would really impact the markets, the economy overall, would have a much more dramatic impact. So I think we're far from it. A lot of hopes are being pinned on the vaccine. What if that vaccine doesn't come until, like some experts are saying, third quarter of 2021 or potentially later? How bad is this going to get? That's the real concern.
Right. Yeah, no. So I would say that's a very pessimistic look at kind of the view of the market. And I don't think it's not labeled in fact. Do you see a pretty major pullback possible in the major market indices like DIA, SPY, those type of things?
I do. First of all, I think there's more weakness in the market than we see for a few reasons. Number one, if you look at central banks and how much how much money they've been putting into this economy, it's really off the charts. It's, we've never seen it at this level. And I'll show you the Fed, the Federal Reserve, what they've been doing. And if you go back to 2002 until today, we've seen an 880% increase. But really, that's all come mainly in two events. So the 2008, we saw a huge increase, 151% in assets that they're buying, assets on the books. But look at that. They had put in about 2.2 trillion there. Now, in 2020, it was over 7 trillion. And they're not done yet. They're still buying. And so this market really has been propped up by the central banks, by the Feds, and it really has been in a handful of stocks. And so if you look at this, if you look at Facebook, Apple, Google, otherwise Alphabet, I should say, otherwise known as Google, Amazon, Netflix, and Microsoft, if you look at the market where it is here with those stocks, if you remove these six, the S&P is down here. So really, all the buying has been concentrated in that one sector and in the six group of six stocks. Now, what worries me about this is that if we look at something like an Apple, for example, we've put in a lower low and we're breaking below the 20 here. And again, the key is the lack of support behind. So if we give way, if this low near 105 gives way, there's a lot of room to move lower and do so rapidly. So we could look at the weekly chart, and it'll help you see the lack of support a little clearer. And you can look at the monthly chart, and it'll show you exactly not only how extended this is. I mean, from a technical analysis perspective, when I use the 20-period moving average, Jeff, I use it mostly for momentum to judge the slope, right? We spent a lot of time working on that together.
I remember we spent about 4 or 5 months one time working on a slope calculation.
Exactly. Yeah. But, you know, it also acts as a magnet. In other words, when price moves away, it eventually snaps back to that 20, right? So if you look in years past, how far it's moved away from that 20 before it snapped back. And this is the monthly chart on Apple, right? You know, we thought this was extended here. Look how far it is away from that 20 now. So not only is it due for a snapback, but if you look at how far away it is and where the 20 is, you're looking at the price of Apple to get cut in half at a minimum. And then at that point, you're looking at, is there enough support here to hold that price, or are we coming down a little further? And so I think that's just the first target to the downside when this turns. But if you think of Apple doing this, right, if Apple loses 50% of its value, yet Apple was responsible for a good portion of the gains, right? What is going to happen to the rest of the market, or the market overall? And then if you look at something like an Amazon, right, it's in exactly the same type of position, right? And so Amazon realistically can come back to 2000 without a problem at all, because there's really no support there, right? So, you know, and Amazon really has fared well during the COVID situation, because a lot of people that weren't shopping online before now were, right?
Right,
so
right.
They got a big boost. But again, if you bring a vaccine into the picture and people can go back to the mall and comfortably and so on, you know, does that mean Amazon's going to take a bit of a hit? Or all we have to think about is, what if the Fed stops buying these 6 stocks?
That's what makes me more nervous than
right.
Because I think Amazon. I think a lot of people have kind of been introduced to Amazon, and they're like, you know, this is somewhat easy. I don't have to go out. I don't have to get my shoes on, whatever, right? But what happens if the Fed stops propping this up? That's
right.
Much more nerve-wracking to me.
Exactly. So, you know, and there's many other stocks we can look at that have had a really nice ride, but that really don't have much in the way of support below, right? And we've seen it a million times. I mean, anyone who's been trading for a while can tell you that it happens over and over again. I mean, look at Tesla, right? And you can build a case for Tesla because, you know, Tesla, the battery operated vehicles, right? The way of the future and so on. But when it comes to trading, support and resistance are really the basics. And yes, they may have a bright future, but if things turn around here, there's nothing holding it up, right? So we can see Tesla come back to 100 or less here. And it may sound unrealistic, but if, you know, we go back to the beginning of 2020, if I had said to you, well, Tesla's, you know, in the $70, $80 range, do you think we'll hit 500 by the end of the year? You probably would have laughed, right? But it happened. It can just as easily come all the way back. So imagine the impact, considering the weighting that a stock like Tesla has on the Nasdaq 100, or Apple, Amazon, very heavily weighted. If they all pull back a significant amount, what are the overall markets going to look like? So when I look at the SPYs, the S&P 500, and I look at a monthly time frame, I'm at a minimum looking for a pullback to here, right? So we're at 345, and I'm looking at about 150, really, for this thing. So, I mean, that's a dramatic pullback.
Yeah.
It's kind of scary to think about, but I think it can realistically happen. And with the election, I think there's going to be some pretty wild swings. I think the election can go one of 3 ways, really. We can have a runaway winner, one way or the other, you know, a landslide, so there's no disputing it. We can have a closer election, but there's still a defined winner on election night, or we can have no one declared a winner on an election night. It's too close to call, and, you know, the votes to be counted later on. I think if there's a landslide win and it's a clear winner declared early on November 3rd, I think that's the best case scenario as far as volatility entering the market. I think that's the one situation that'll cause the least amount of moves. If it's close and there's a winner declared, we may have one party or the other, contest that. And if there's no winner declared, that's the worst case scenario, I think, because that brings just more uncertainty into the market, and that's what the market hates most, right?
And they are warning people, hey, it's going to be an election week this time around, instead of an election night, right? It's going to take a while to count all the ballots. Turnout is awesome, it's amazing, but a lot of that turnout has already happened by mail. And if you watch TV, they're saying, okay, prepare. It's going to take us a week to figure out who won this thing. So,
right.
But hopefully it's a landslide one way or the other, right?
Exactly.
Because you're right, the market hates uncertainty. It just it doesn't. So, is there anything that you're bullish on?
You know what? I mean, when you look at the charts right now, I'm pretty much bullish across the board when I look at the charts. I trade on technical analysis, and most charts look great. I just don't like the fact that most of my positions are long when I'm seeing things, and I say things, I mean the economy and all those other potential dangerous scenarios going in the opposite direction. So it's uncomfortable to go with it, but for those of us who trade on technical analysis, you have to go with it until the charts tell you otherwise. And right now, overwhelmingly, things look bullish, and a lot of charts are going higher. Again, I would look at the issues that were beaten up but never really recovered. And the energy sector is one that has a number of those plays. I mean, you look at ExxonMobil, for example, right? And, this is very early here, obviously, and by no means is it in the clear. This is still just the daily chart. But I think this is very inexpensive, and if we do get a vaccine, I think this will be one of the winners as well. So on this one, I'm not ready to call a long on it yet, but it's one I'm definitely watching, because I do believe that if it hasn't hit bottom yet, it's pretty darn close. We just don't see enough alignment between the daily, the weekly, and the monthly chart to allow us to jump in just yet. But I would look at the issues that were beaten up the most and go from there. There are going to be winners, like, for example, Wynn. I really like Wynn Resorts, not right now, but I'm thinking they have most of their investments in overseas in casinos. And they're not a big player in Vegas. They're bigger in Macau and over in Asia. And so I think there it's a totally different scenario. And if a vaccine comes into play, understanding the culture over there and everything, I think the casinos will come roaring back. So I think that is one to definitely keep an eye on. And from a technical analysis standpoint, many of these are going to be easy to play. Even the financials, for example, if you look at, I don't know, let me see if, like Bank of America or I think Citigroup. Yeah, most of them have been in a range, right? So we made a lackluster attempt at a comeback here, really failed and just kind of went sideways. Mm-hmm. So really, all this is going to take is patience, because all you have to do is mark the highs of those consolidation zones. And when you break above there, these things will rip. And so if you put together a list stocks like this, and the airlines, the cruise ships. Let's look at like RCL, Royal Caribbean.
Greg will love the fact that you're looking at RCL.
Yeah. Royal Caribbean, Carnival, Norwegian. I mean, the risk you have with these stocks, in my opinion, is that they don't survive until we get a vaccine, right? Mm-hmm. But if they've received funding and can last until then, I think they'll come roaring back. And I think from a technical perspective, if you mark the highs of this recent range here, what I mean by range was after that, we put in a bottom here, we failed to really break higher, and then we kind of went flat. If you just mark the highs, in this case, 75 for RCL, any break above 75, and I think it takes off. So there's going to be a lot of opportunities there. Let's look at Southwest Airlines, right? This one is almost getting there. And I mean, we don't even have a vaccine yet. So, you know, if you break above resistance and you have a clear shot ahead, what's going to hold it back, right? I mean, that's the thing with technical analysis. We have the luxury of not caring about why something is happening. We don't need to know why it's happening. We just need to know what is happening. If we always try to figure out why, we're going to drive ourselves nuts, right? So for whatever reason, buyers are taking control again here. There's buying coming into Southwest Airlines. So we don't really care why. We just need to know that it is happening. And if we break above a high, right? And, you know, we have a system that we are comfortable with, that we know puts the odds in our favor, then it gives us a little more confidence. And when we look at this, at a minimum, right, at least on the daily chart, we'll confirm it on the weekly or the monthly, but we've got that amount of space here for a move. So that puts us from about 43, right, to about 54, right? What is that, 10, 11 point move? Not great, but if you go back to something like RCL and you draw the same thing, right? You look at a break from that level to, let's even call over here, even though that's not a lot of support, you know, now you're talking about going from 75 to 115. There is a lot of potential profit there, right? And there are dozens of cases like this that you can look at.
What do you think about DIS, Disney?
Disney? Sure, let's look at Disney. Disney is interesting because of all the their streaming service that they launched, that is becoming a bigger part of their business. More of a choppy chart here, but this one certainly looks like it wants to get back to 150 here, in my opinion. And I really like the monthly chart on this. I think we've turned the corner here. This area in here is what I was really worried about. That if it broke down here, you see the lack of support. That's what I was really concerned about when we were pushing through here. It held that level, and now it broke above the high of that range. There it is. So I think 150, 160 is the next target for Disney. Now, if the market eventually rolls over, then you've got to relook at this 90 level here. And if it breaks, then I think we're coming down to here at a minimum. Really more like, yeah, let's call it 40. So again, from 90 to 40, boy, that's one heck of a drop. But right now, it's under 130, and we can go to 160 without a problem. There's really very little resistance there.
Thank you. Thank you.
Yeah.
If I can kind of take away right now, if we're looking at the charts, we're fairly optimistic. It sounds like. But just keep your stops in, I think, is probably what the advice that I'm picking from you today is.
Yeah, it is. Most of the stocks are pointing higher. What you don't want to do, though, is load up on longs, right? No matter what the market environment is, you always want a few plays in the opposite direction.
Okay.
More of a hedge than anything, but especially understanding that the market is really driven by that small group of stocks and the Fed supporting the market right now, it can turn on you very, very quickly. So, these are times where I protect my positions more than ever, meaning if I'm long a stock, I will marry a put to it. And as we head into the election night, I will also write calls against it. In many cases, I will go delta neutral, right? So for example, if I own Disney here, the stock has a 100 delta, right? For every dollar it moves, you're either going to profit $1 or lose $1, right? But say you have a put that has a 40 delta on it, which is really protecting your position, meaning you have a specific price level that you can get out at if you exercise that put. But even just holding it as a hedge, you've only hedged about 40% of your position with that delta. So if you sell a call that has a 60 delta, now between the 40 delta on the put and the 60 delta on the call, you have 100 delta offsetting the 100 delta on the stock. So what that means is, regardless of what that stock does, election night or the day or two later, you're not going to profit, but you won't lose either, right? It's just going to be a break even. It's just a way to hold the stock through a crazy event where you don't really know what is going to happen. And then once you realize what the outcome is then you can make a decision as to, do I take the call position off? Do I take the put position off? Or do I close the whole thing and move on, right? So, and actually, going back here, you know what? If we look at instruments that have been put on to hedge the election, the S&P futures, SPX options, and so on. But as far as volatility issues and the SPYs, very little has been put on here. So we'll probably see that ramp up as we get closer to election night. But I think a lot of people are feeling quite confident about the market, regardless of the election, because I don't think a lot of people realize that it's been propped up by only a handful of stocks, right? And I think that's a dangerous environment. I think a lot of people going in unprotected that way. Once we do get some wild swings, you'll start seeing some panic coming in, some panic selling, and then it all feeds on itself. So I'm a little worried about that scenario taking place as well.
Yeah. It is. It's unprecedented how much we've disconnected the actual market from Main Street anymore. And it's like, it seems like there needs to be a kind of a reckoning, if you would. And I'm scared of it too.
Yeah.
So,
yeah.
In any case, on that note, any final thoughts? So Vince Vora, guys, tradingwins.com. If you want to get a hold of him, I think you said info@tradingwins.com would be the best way to do it.
Yes, info@tradingwins.com. Any questions you have there, we'd be happy to answer them for you. And if there's any other stocks you want to look at, I'd be happy to pull some up. But I don't mean to sound so pessimistic, but I think it's only fair to put these thoughts into the back of your head, because it's reality. And I've been doing this a very, very long time. And one thing I know for sure is that when things get disconnected, like the market and the economy, they always come back in line. Always. It's just a matter of time. And you don't want to get hurt in that process, right? So
Right.
I think you need to understand what the realistic picture is, and that is it. So as much as I'm saying that, I don't mean stop trading or, start panicking. No, as long as the technicals are still telling you to go longer here, you go long, but you got to be very aware. And one of the things I will tell you that I'm looking at is not only the index charts, like the SPYs, the Dow Jones, the Nasdaq, and the Russell, looking for turning points, and more importantly, a break below a recent low. That is crucial. But I'm looking at those same 6 stocks that took us higher: Apple, Amazon, Google, etc., that we looked at earlier, and looking for those turning points. So when those break a low, like we see that Apple looks like it might, that I think is a big warning sign. So I would keep a watch list of those 6 and the 4 index charts, just those 10 symbols, and look. And if they start to align one after the other, starting to roll, we're on the edge of that cliff about to drop. So I would keep that in mind.
Do you think some of that risk might be offset by just the amount of liquidity that's just been injected?
Yes and no. I mean, and first of all, I should say we haven't talked about the stimulus package that's being discussed right now, because if that comes in, that will help as well, right? Mm-hmm. But I think longer term, the scary side of that is the devaluation of the dollar, right? The amount of stimulus we've seen until now, and if we get us another, 2 trillion or whatever it is that they put in, I think the dollar continues to take a hit. And that's when it becomes problematic. Because now if you're a business that's importing materials to make your product or so on, that's going to cost you a lot more. Your dollar is going to allow you to buy a lot less. And so we can't let the dollar completely crash. And I'm looking at 92 here as a level to watch on the dollar index. If it breaks below 92, I would really start to worry. And I think we will get there. I think it's just a matter of time. But, one way to offset this is to play the Forex pairs, any pair against the US dollar. So the British pound, I think right now is doing quite strong. The yen, the CAD, and so on. You could offset it that way. But if you look at the dollar index chart, there's a potential to go from that 92 area, to below 85, to somewhere close to 80 here. And that I think would become a real problem. So unfortunately, the Fed has gotten themselves into a very desperate situation. I mean, think of it this way. I think the last time I looked at the stats, the Fed owned about 23,000 different issues. Most of those are treasuries, but a lot of that is stock as well. And they eventually have to unwind that spreadsheet, right? They eventually have to unload some of that. So they obviously have to do it very slowly, but the debt that they have to carry, and if COVID does not get under control, and they not only have to give us this stimulus, this round of stimulus, but yet another round at some point, the more that carries on, the more pressure goes on the dollar, which puts pressure on the whole marketplace. So they're in a real tough spot, and I think the economy overall is in a real difficult position right now. We haven't felt the impact yet. Obviously, some business owners have, but the rest of us really haven't had that much of an impact yet. I think there's more to come. So it really does hinge on COVID, I think. And right now we don't have a handle on it, which is very, very scary.
DM wants to know if you can look at CDNS.
CDNS, sure.
Mm-hmm.
.o.
That's right.
Yeah, I mean, this is the monthly chart, and you can see it's been a straight line up. The other thing I would always tell you to do or encourage you to do when you're looking at a chart is look for a breakout to all-time highs, right? So, you know, when we broke above the highs here, it took off, right? Came back, took off, and then if it comes back to a prior high, that's even better, right? But look at that straight line. Now, the only thing concerning here about CDNS is the distance that it is from the 20, but most charts look like this right now. So as long as this trend continues, it's all good, right? When we turn the corner and all of these start coming back to a level of support, that's when you get a very rapid decline. So we're nowhere near there yet, but you've just got to keep that in mind. But, you know, looking at the weekly chart here, also nice, solid, steady trend, you know, close to those all-time highs, no resistance overhead. And daily chart is neutral right now. We have a potential double top here, or it's just the start of a channel, right? There. And again, all you need to look at is either a break above there or a break below here. But considering the slope on that 20, considering the momentum, if we got another long entry here, and considering what the weekly and the monthly charts look like, I would take that because I think that would bust you through this level here and send you off to new all-time highs. Because whenever you look at a setup like that, you've got to look at the amount of resistance overhead, and there really isn't much here. So with this kind of slope, if we get a setup, we're gone.
Good. We got more. I think the audience realized that we'll look at stocks if they ask for them.
Sure. Why not?
Dave wants to look at APPS.
APPS, did you say?
Mm-hmm. Yes. Yeah. Mm-hmm. Digital turbine.
Yeah, and right now, I mean, it's coming back, but look, it's right back at a level of support. So the other thing I would look at here is this a proper fib level? Let's see. So I would take the most recent major low here to high. And yeah, look at that. It's right back at the 50% retracement mark. There is support here. So if this would bounce off this level here and give us a long entry, I'd be very happy with that. Breaking below here, especially the 61.8, then all bets are off. Because if you look at this has just been a bit of a pullback. We don't even have a lower low yet or a lower high. This is just a retracement right back into support. So I would think that we're going to find support here and turn and set up again for a move back to the highs. Let's quickly, though, look at the weekly and the monthly to confirm there. Straight line up. Look, once we break the highs, it just takes off. It's incredible. So we are certainly stretched here. We are extended. Look how far away we are from the 20. That's kind of scary.
Look at that, right? Doji on the monthly.
Yeah, that's crazy. But this is another pattern. I'm sure you've heard me talk about this many times, Jeff, but on the monthly time frame, when something gets hit really hard for whatever reason, and we go into a very long-winded consolidation, when we break above those highs, it's usually a very powerful move. And the longer the consolidation, the better it is, right? So if we mark this, when you're in a consolidation like that, you want to measure the length of the channel to the breakout point. And when you look at that, then what you should expect is a move similar in size to the length of this channel. And if you can see, maybe we're at 3/4 of it. There's probably more room to go here on this. But this is the type of pattern that you should always look for. But right now, this stock is still very, very strong, but it is very extended. So again, look for a bounce from here. But if we take out a low, then look for a serious pullback.
All right. Ebener says, great stream. So good job. And he wants to look at AMD, please.
AMD, sure. We were talking about AMD earlier in our member group because Intel, as you know, reported earnings last night, got hit again. And so someone asked the question, is AMD going to be a beneficiary of that? And I think it could be. Now, it's been consolidating here for a little while, but I do think there's upside to come. If you look at the weekly, we're still in a very nice trend, and we're not that far away from the 20 at all yet. And the monthly, I mean, yeah, we're certainly further away, but we have lots of momentum here still, and it's just taking a bit of a breather here. I think there's more upside to come here on AMD.
All right. Next, FNIO from Phil.
Sure. Absolutely. FNIO?
Just NIO, no F.
Oh, NIO. That's the, is it, oops, sorry, wrong side. That's the electric car maker, isn't it?
I'm not sure.
NIO? Yeah, NIO. They're like the Chinese Tesla, I think their nickname. Doing really well here as well. I would never chase one of these. I'd wait for it to pull back and set up again. But it looks like it's in the process of doing that. If we look at the weekly, yeah, there isn't a whole lot of data here. But again, if you mark that high, there it is. Look at that. We took off, retested it, and then it was just a straight line. Beautiful. Lots of momentum. This one is very strong, and I think will be strong for a while. And this is another one that I think you should have on your watch list for quite some time. It's an electric vehicle play, and any pullback into support, and if you get another setup, you should go with it.
All right. Very good. That's the end of the request. So thanks for the stocks, everybody. I don't have any graceful way to kind of wrap this up. Do you have any thoughts that you want to share with us to end this out?
Again, I think just be careful. Plan ahead for the election. Try not to get caught in the craziness that comes afterwards. I mean, if we remember last year, most of that craziness happened in the overnight period. So if you were watching the futures, your head was spinning. But after the market opened, the morning kind of settled down, right?
You're talking about the last cycle, right?
Yeah, that's right.
The Hillary cycle. Okay.
That's right. So, come election, I think it'll be the same. The futures will go nuts overnight. But then once the market opens, things will settle down. I think the only time we should expect more volatility or craziness is if there isn't a winner declared or if someone contests it and so on, and it's going to carry on for a while. That uncertainty will hurt. But otherwise, if you're worried about it, protect your positions with options, or you could always lighten up, get out of the market, and get right back in once things settle down, right? But there's going to be a lot of opportunity, whether this market rolls over or not. There's always there are always going to be plays, and I think there's going to be some big swings coming up. So I'd fasten your seatbelt.
All right. Thanks, Vince. I appreciate it. It's always great to have you on here. Vince Vora, info@tradingwins.com. And I look forward to seeing you again pretty soon.
Yeah, thanks for having me on.
All right. And for everybody that's in the audience today, hope you enjoyed it. If you did, leave a like and a subscribe. It does help. And we'll see you at the next one.
Take care, everyone.